Good evening，佢哋嗌緊蒙耍 bonus not just born 可以刺激 investors in North and South America。我有朋友認為散用黑少數嘅炒股嘅走出。Good morning to investors in Asia。本來我啲 bonus not just good enough for China。Good night to investors in Europe and Africa. I'm Daniel speaking from Hong Kong. It's 31st July here and 30th July in Wall Street. This week I have 3 main points to talk about. Number 1, speech of Jerome Powell. Number 2, turning and returning of the market. Number 3, counter-offensive of Ukraine. And stock recommendations will be of high dividend stocks. Subscribe, like and share. Remember to click the bell piece. Watch our playlist again so as to grasp the continuous trend of the market and refresh your mind. The U.S. Federal Reserve bears a nickname which is the central bank of central banks. It does not mean other central banks would deposit money into them, but would follow their monetary decisions, especially on interest rate. In the past, every time after a rate decision, the market aimed at a statement released just after it, but it was so full of jargon that it was hard to understand the actual meaning. So they turned to learn from the European Central Bank and now host press conference every time after rate decision. Thus, the press can ask questions directly to ask the chair to explain the items the market is concerned most. However, last week, Powell made clear his standpoints in the conference, which is very rare. Let's have a look at the main points. Number 1, there will be no interest rate cuts this year, but many officials support multiple interest rate cuts next year. Number 2, if there is stated support, interest rate may be raised again in September. Number 3, monetary policy is already restrictive, but interest rate need to remain high for a period of time. Number 4, future interest rates will be added on a meeting-by-meeting basis. Number 5, inflation has easier, but there's still a long way to go before falling back to 2%. Number 6, the labor market is very tight and the Fed no longer predicts a recession in the US economy. Number 7, interest rate adjustment and balance sheet reduction are independent, and interest rates may be reduced while reducing the balance sheet. Number 8, high interest rates have rate on growth in the real estate market, while US banking sector has stabilized. So this is the end. We can see that confusion ends here. Jerome Powell really answered every question that the market wanted him to answer. But what's the response of the market? We better have a look at the S&P 500. After a series of rises, people are expecting an adjustment will come soon. And just find a chance or reason for adjustment. The FOMC meeting is really a reasonable turning point. Last Wednesday, it was in a small white candlestick struggling, and on Thursday showed a big black candlestick engulfing the whole small white candlestick of Wednesday. Basically, it's a bearish signal, but we still have to observe the past trend. If it occurs after a long trend of rising, the rate way will be higher. But we also have to mind the practical situation, that is what is happening outside the chart. The FOMC meeting is one of the most reasonable changes at top of this wave. Therefore, a lot of investors looked bearish on the market. However, on Friday, 3 major indices all rose up and formed the bullish harami that is looking upward. Now comes the question. On the signal of Thursday, it is bearish. On Friday, it is bullish. What should we do? First of all, please study my electronic handles thoroughly with a series of 40 teaching videos engulfed with certain texts and philosophical questions to think about as somewhere. Also have live examples. It is quite hard to just pick up one pattern to discuss, or else it will be like blind man catching an elephant. Investors must have comprehensive study on chart analysis, fundamental analysis, and economic indicators before entering into the market. They are all converted inside the electronic handouts and teaching videos. So what's the outlook of the market? What should we care about? One very important thing chart analysis cannot show. One important thing investor always neglected. That's the interval of FOMC meeting. Normally it runs at an interval of 6 weeks per meeting, but from July 25th to 26th to September 19th to 20th meeting, it does 8 weeks, for they have to reserve time for the Jackson Hole annual meeting. Details please refer to the US Stock Express of 2023-0728. So during this long interval, there will be a lot of economic indicators announced twice, including GDP, PCE, CPI, PPI, and Employment Report. Each will be overwhelmed by the other next. So we have to take a deep look. The GDP announced on Thursday was at 2.4%, where the previous was 2.0%, and this time is better than expectation of 1.8%. Annual growth rose from 1.8 to 2.6%, where expectation was just 1.8%. When most people were worrying about recession, these figures show no need to worry, but there will be another announcement on August 30th. As for the PCE of last Friday, it dropped greatly from 3.8% to 3.0%, showing inflation is really under control. What the Federal Reserve wants most is the core CPI. It dropped from 4.6% to 4.1%, lower than expectation of 4.2%. Even though the monthly wage rose from 0.1% to 0.2%, but do not be so happy. Another PCE will come on August 31st. It will overrun this report. However, looking forward to this week. Of course, it will be concerning the employment report of coming Friday. Non-farm payroll is expected to lower from 190K to 200K in comparison with the last reading of 209K. It is not so nice to the economy, but nice to inflation control, especially now is in cost through inflation. Another good worry is the recession. Normally, it will come with high unemployment rate, which leads to less spending power. But the unemployment rate is so low now. This time it's expected to keep unchanged at 3.6%. I've reiterated so many times, it goes back to the level of 1969, the landing of the moon, which is greatest project of America. Let's study again the unemployment rate of 1969. The landing of the moon is in July, and the unemployment rate is 3.5%. August is also 3.5%. September and October 3.7%. November and December 3.5%. Hallelujah! Amitabha, Allahu Akbar. We are at the best situation in a half century, that is the strongest ground, that no need to worry about recession. So let's take a look at the future trend of the interest rate. Even though the rise of rate since last March to now is so deep, from 0.00 to 0.25% to 5.25 to 5.00% in just 16 months, it is the steepest rise that ever had in history. But because of the increase in non-farm payroll, everything is under control. Economy is in full bloom and no worries for bubbling. Therefore, the sustained rise in three major indices are considered with a good foundation. The rise should be steady, and any adjustment is a good chance of changing horses. All three major indices have already ended into bull market. We are in bull market stage 2, where every news, no matter good or bad news, will be considered as good news and have a good effect on the market. We are in a position of buying at bad news and selling at good news, which means healthy adjustment is on the way. So in the coming month, mind the double contractual of CPI, PPI, PCE, GDP, and employment reports. As for the situation in Ukraine, even the counter-offensive is quite slow, but they have gained back about 50% of the land lost in the last year, which are the shaded parts in the north of this picture. The progress is slow because Russia already established several defense lines in the past year of changes and mines, but during the invasion of last year, Ukrainians had no special military defense foundation, and that's why the progress of Russia was so fast. Just repeat my motto: without F-16, Ukraine cannot do anything. Without China, Russia cannot win the fighting. Now the F-16 will arrive in December, run by international pilots as the Flying Tiger in World War II. The market situation is continuing to go up, and it's quite hard to wait for the adjustment of buying and low. If you wait, it even flies up. If you chase just afraid of turning down, such as signals of bearish engulfing and bullish engulfing coming alternatively, what should we do? The best way is to buy high dividend stocks. So your focus is on the dividend and not on the price. So just let the price go up and down, and you can earn the dividends. Please remember, my most favorite high dividend stock is still the QYLD. The dividends are paid on a monthly basis at the rate of 20 US cents every month, and you can use it for reinvestment. The last closing price is 18.025, and dividend of 2022 is 2.0069. So when divided by the dividend, that means after 8.98 years, all money inside your account are a total profit, and the dividend you got in these years can be taken out for other usage of reinvestment. For other high dividend stocks such as KF, the dividend rate is now at 37.66% in comparison with the January of US stocks, which is 2.73%, and the industry is just 8.29%. The last closing price is $24.919, and the dividend of 2022 is 3.3188. This means after 7.288 years, you can earn back all your capital by dividends, and all money inside your account is a total profit. For GECC, the last closing price is 8.26. Dividend rate is 29.06 in comparison with the average of US stock of 2.73%, and the industry is 8.29%. For CLM, the last closing price is 8.660. Dividend rate is 24.38% in comparison with US stock of 2.73%, and the industry is 8.29%. Lastly is CRF. The dividend rate is 23.53%. Industry rate level is 8.29%, and the average market rate is 2.73%. Last closing price is 8.39%. Dividend in 2022 is $1.9744. So when you divide the price by dividend, you can get back all your money in just 4.24 years. Wouldn't it be lovely? Lovely. Finally, remember the red year will bring peace on earth, and let's see how the peace talk of Russian-Ukraine conflict starts. For already said, after the start of summer on May 6th, counter-offensive will start, and an important battle around June 21st, the summer solstice, where the routinely occur in Russia. This is a changing point of the fighting that Russia has to fight both inside and outside the borderline. For traveling stocks will be postponed to talk about next week, and also we'll talk about the International Monetary Fund from the angle of Chinese geomancy. So then subscribe, share, and like please. 細諗啊，Auf Wiedersehen, Adu, bye bye, see you next week.